Chinese Communist Party. I'm not sure if they coordinated those two things to happen at the same time, but nonetheless, they are. Let's kick off with our regular Thursday morning commentator, Dr. Karol Nachlich, CEO, Crystal Energy, sitting in Germany. Karol, oil markets a little bit up this week, but you'd have to say through the week it's been a sideways move, some sense of anticipation about the OPEC meeting today, what direction they will point supply. Your thoughts this morning?
Good morning, Sean. Good morning, everyone. Well, look, this week I'm actually less upbeat than I was a week ago, and primarily because I cannot look at the oil markets without looking at what's happening elsewhere, primarily in the bigger picture. So actually, if you look at oil prices, I mean, definitely they had an impressive recovery quite fast, and you can see that happening particularly from the 1st of November last year, and it has accelerated in the second quarter of this year. And we can say the same of many commodities, but the
oil prices up, sorry to interrupt, oil price up 40% in the first half.
And it's getting even faster now. So that's one key difference, I would say. But the other key difference is that you can see that there are more swings compared to other commodities. So you are seeing more volatility and changes. And that's exactly what illustrates your point about the changes this week. And they might change differently after OPEC's outcome today. But there is a key difference that people have to recognize between oil and other commodities. So when people talk about an oil market which is politicized, and I was reading just now an article on the FT which says quite exactly that. It has to be remembered that with other commodities, the key driver has been particularly demand growth. With oil, you have to remember that we have supply constraint. So it's not just demand growth, which is there, but not quite as impressive as we're seeing elsewhere because of jet fuels, because of traveling, and all the unknowns that are related now to this Delta variant, which is ravaging, I would say, Asia, and it's quite worrying, even here in Europe and elsewhere. So we do have this missing component. As a result, what we're seeing with oil prices is primarily because of a supply constraint driven by OPEC's Plus decision, which is by itself a political decision. So that's why we're seeing this kind of movements that you referred to in your question, Sean.
Let's welcome Amina Bakr, Chief OPEC Correspondent and Deputy Bureau Chief of Energy Intelligence. Amina, big day for you, of course, at the front end of covering all of this. In the run-up to the meeting today, Amina, have you any kind of insights you can share with us as to where the sort of nux of the story is?
Good morning, Sean, and good morning, everyone. And yes, today we have a marathon of OPEC meetings, 3 meetings happening today, first with OPEC, then the JMMC, and then OPEC Plus, which is supposed to start around 7 p.m. Vienna time. So I think it's going to be a pretty late one. In terms of what the expectations are, yesterday, we've managed to find out that there was no consensus really, but just looking at the JTC report, they had a JTC meeting earlier this day. The group reviewed 3 scenarios. And in all 3 scenarios, it showed that there's a huge risk of a stockpile happening in 2022. Sure, all 3 scenarios also showed by the second half of the year that more oil is needed, but there is a concern of the stock buildup in 2022. So any decision they take now might affect what will happen early next year. How that's going to be handled by the group remains to be seen. We still understand that Russia, and we heard yesterday as well from the Kazakhstan oil minister that they wish to see some form of easing of the cuts. When that would happen, by August or September, remains to be seen. So it's really hard to predict this one, Sean.
They're holding their cards close to their chest. There was some reading of the tea leaves, Amina, that regarding the delay of the JMMC meeting. Was that just administrative, or were the reasons behind why it didn't take place yesterday or the day before, whenever it was meant to take place?
That was mainly a request made by Russia's Novak. He sent a request to the Secretariat to delay the meeting by a day due to his commitments with the president. And it has happened before. I mean, he's asked for delays. Perhaps this gives him a little bit more time to consider some kind of compromise to the deal. But again, from our understanding is that Russia doesn't want to see a repeat of March 2020. They don't want to see this whole declaration of cooperation collapse. So we are expecting to see some kind of compromise happen.
Let's welcome Mark Oswald, Chief Economist and Global Strategist at ADM Investor Services International. Mark, good morning.
Good morning.
What should OPEC do, if, from your perspective, to keep the prices where they're roughly at in the 70s, but that at the same token, bring market share back to its members? What are your thoughts?
I think what they really need to do is build in the sort of flexibility that a lot of central banks have been trying to do, i.e. they say that the risks on oil prices and oil demand are basically two-sided. So they basically concede that they need to up production for at least Q3 and expect to in Q4, but they could basically not increase production, decide later that they need to cap it a little. If demand doesn't, particularly with the spread of the Delta variant, particularly given concerns, I think Russians' concerns above all that US shale production will suddenly increase to make up for any shortfall. So I think it's building in the flexibility, and probably they're going to need to come to some sort of agreement to extend the current OPEC Plus agreement beyond April 2022.
Do you think they need to be signaling that already, i.e. beyond 22? Is that not sort of putting the cart before the horse in a way, dealing with the immediate demand recovery expectations of the second half of the year?
I think probably on balance, the decision boils down to they want to show their commitment to trying to be the key producer or the key producing area. And that I think is important at the current moment, particularly as we've got such a fluid outlook in terms of fiscal policies. We've got fluid outlooks in terms of central bank policies. Perhaps some stronger signal from them that they are cohesive is probably as important as anything else.
Carol, we still see in the U.S. the economy there doing very well. Obviously, the Delta variant causing lots of problems now in Europe and elsewhere, but in the U.S. it's still very strong recovery. We saw yesterday U.S. private payrolls increased more than expected in June, and clearly labor is coming back into that part of the U.S. economic recovery puzzle. Your thoughts about where the balance between those two are, U.S. strength, China strength as well, versus some of these weaker demand centers perhaps in Europe?
Sean, I'm glad you raised that, because yesterday I came across a statement made by the head of the Bank for International Settlement, which is a bank for banks. And he said something quite worrying, and that reflects the situation that we are facing today, and we're likely to face even more in the future. And he referred to the emerging markets, the developing economies, the poorer countries. And he said, for the first time in the world, I need to get it right, he said that the economic growth of the advanced economies is higher than the world economic growth, which is higher than that of emerging economies. And in this respect, he warned that the worst is yet to come for the emerging, poorer, developing economies. So we haven't seen the full story yet. Yes, our eyes are usually focused on the US and China, not surprisingly, because they are the two largest economies, and the US is doing pretty well. For China, I'm having to have my own concerns because of the vaccine's effectiveness, and this is becoming more of an issue. And you can see how in some countries where the virus, the Delta variant is spreading, it's primarily where we had the spread of the Chinese vaccine. So China looks okay at this stage, but if things get worse, it may be under pressure in terms economically speaking. So overall, we are looking at the US, things are looking very good there. So I'm not too worried about Europe, because Europe is catching up. Ironically, I heard today that Germany bought, if I'm not mistaken, 200 million additional vaccine for an 80 million population. And I wonder whether it is because they want to be prepared for the worst, or they want to give it to other countries. So it's still pretty fluid situation of a divergent speed of recovery between the richer countries and the poorer countries, emerging markets. And this is pretty worrying in the longer term for global economic growth.
Mina, given the different options in front of OPEC right now, OPEC Plus, we've always sort of been observing that the 5-year average for global oil inventories was their kind of North Star that guided most of the decision making in terms of at least a destination. We have arrived at that destination. Do we have a new one, or is that still there, and how does it impact the decision?
Oh, sure. I mean, the 5-year average was always, as you mentioned, like a milestone or a target, and it's still mentioned in many of the Secretariat's reports, but it's not the only factor that they look at. With current prices where they are now, a lot of the countries that have suffered through 2020 see the current price at 75 and above, a way for their budgets to recover. And they're quite reluctant, really, to see prices drop under that level. So of course, price is a factor. They also look, I mean, the demand is as huge as I mentioned. They're not just looking at demand at the second half of the year. They're looking into 2022 now. And I agree with Mark. I mean, in order for the group to send out a positive signal to the market, and they are in control, they're behind the steering wheel, they need to take preemptive action and send out a message that market management will remain and they'll stay in control. And having these monthly meetings also helps, so they can make incremental changes. But just one thing that I find as a personal challenge, if they do decide to ease the cuts for a period of 1 month or 2 months, going back and cutting, now that's the problem. You can ease, but you can't cut back that easily. And not.
Do you think that that's even an option, that they'd be looking at cutting deeper than what is already on the table?
Well, if they're, no, not deeper. I'm saying if they decide to ease for August and September or
okay,
then they need to curtail again. Now that's the issue here. Not one is really compliant with their quotas, and countries might be reluctant to go back. So that's a bit of an issue and a challenge that I see.
It certainly looks like in some ways they have, Mark, the supply side distractions already kind of cleared away, with Iran not really being an issue at the moment, shale not really being an issue at the moment. The demand issue, which was looking quite robust, and there's a little fractures in it now, but demand is indicating that we are already in excess, in a supply deficiency. I'm wondering, from your perspective, should OPEC come and fill that, or allow stocks to draw down even further?
I think they'd probably be best, because they are more than aware that H1 could see a swing back, H122 could see a swing back. I think their best option is to err on the side of caution. So give. And
what is caution?
Yeah, some increase, but allow stocks to fall. And if you allow stocks to fall, basically at that point you can say, well, it doesn't really matter that demand is perhaps not going to meet the extra supply in 2022 because we've drawn down stocks so much. I think the picture in terms of the demand picture globally, I think that there's a couple of important things people need to understand. First of all, what we're seeing with the vaccination rollout in Europe is basically we've got to the stage where we are going to learn to live with this virus. The vaccines are working, it is preventing, but those who are being vaccinated going into hospital or fatalities, we can't stop infection rates, but as long as fatalities and hospitalizations remain low. The key now obviously is Asia. And when I look at the PMIs this morning in Asia, the Japanese Tankan, they were wholly disappointing. The Chinese PMI, very, very disappointing. And it does really attest to, as Carol was pointing out, one, concerns about the Sinovac vaccine's efficacy, which sort of puts it in a different place to Europe and North America. And secondly, it behoves everybody to get the vaccine rolled out in Asia and above all in Africa and Latin America, where the variants are likely to become stronger and stronger.
It certainly does sort of get the attention, but Carol, oil prices are still $75 a barrel. The US economy is thundering ahead to a 7% GDP growth. The Chinese economy, last time it was that it was acknowledged, was targeting towards 9 or 10% growth. I mean, these are massive figures, and putting aside an issue here or there with the Delta variant, demand is soaring back in those major global economies, the two biggest in the world. Europe not lagging that far behind. This is still a glass half full question, I think. What is your thoughts on that? I mean, those trumping the other.
Yeah, it is definitely still a half full, half empty glass. But as I mentioned earlier, the issue of the emerging economies is serious. And add to that, something that was in the news digest that you circulated this morning is how higher prices, and mind you, prices have accelerated and they rose quite rapidly recently. How will this impact the already struggling emerging economies, the net importers? We talk about the US. The US economy, we have to remember, is not just an importing oil and exposed to high prices as we saw, for example, in the 70s and 80s. The US is also benefiting from high prices as a producing country, so they are in the middle. That's what's a bit distorting to look only at the US or only at Europe, but look elsewhere as well. And here I want to quote the Saudi energy minister, who said in the first quarter of this year, when he was asked about demand recovery, he said, "I believe it when I see it." And I think that unless we see really more confident tone, we still have to bear that in mind in terms of outlook for demand, because not just the US and China or Europe. Yes, definitely they help to lift the global economic growth, they help to lift oil demand. But if you're talking about long-term structural change, then we have to bear in mind what is happening elsewhere.
But Carol, on the I'll see demand, I'll see them, I'll know demand when I see it, or whatever the expression was. The higher the oil price goes, in some ways it's a counterintuitive result, because you end up sort of dampening demand recovery, dampening economic strength, particularly in those emerging markets,
and encouraging additional supplies. And actually, I'm trying to get my head around the forecast for next year. And it's amazing how we always get it wrong, because I mentioned earlier what OPEC has been said recently about a build-up in stock and maybe oversupply towards the end of next year, whereas we have the bulls of Wall Street and the IEA last month warning of a tight market, and they were calling on OPEC to release more barrels. So as you can see, these are quite trustworthy agencies and forecasting agencies that you can see that themselves, they don't have a solid grip on what's going to happen in the market. And the big unknown addition to demand is what is going to happen on the supply outside OPEC+. Yes, we're going to expect production from conventional producers coming back, but the big question mark is shale. I'm a strong believer that we haven't heard the end of the story of shale. It will come back at some point. When exactly? Sometimes next year, who knows? But it is just simple economics. If the longer the prices stay where they are today, the more you entice a response from both supply and demand.
Amina, the big question, I suppose, that one is always asking about OPEC and OPEC Plus, and it doesn't go away, is the discipline to stay aligned with the commitment that they've made. The higher the price goes, the general narrative is the weaker the compliance goes. What's your sense of where that's at in the organization, and how much is it guiding decision making going forward?
No, so far, we're seeing from compliance numbers, they've done pretty well, and the compensation scheme is still ongoing. It's supposed to end. They extended it by a few months. It's supposed to end in September. And at that JTC meeting that I mentioned earlier this week, they stressed again that the compensations must continue for that time frame. The only country that didn't submit in a compensation plan and overproduced was Russia. But they have an understanding that if their compliance is in the 90s range, then that's fine. They don't need to submit any compensation plans. But I think for the rest of the group, they really understand the benefit of keeping this production pact in place. So we've been seeing all countries willing at least to give in compensation plans. Some have been really good at actually compensating, surprisingly, including Iraq. I think for the time being, they see a benefit in
Is there an ability, an assumed ability, obviously, in the big players, Saudi and others, to add barrels? But in terms of all of the other members of the OPEC Plus, have most of them the capacity to increase more?
Not so much. I mean, the big countries, of course, Saudi Arabia is the one with the most spare capacity to add. And that's why if we're talking about easing the cuts, maybe some of those smaller producers that don't have the capacity to increase anyway would prefer to have the same quota they're having today with a higher price. So that would be, they would be leaning towards that preference.
Mark, we're not seeing, although we're hearing occasional soundings out of India and others, but we're not really hearing a kind of a big groan from the emerging markets on the current oil price, or indeed the commodity prices as a whole. What's your assessment of that, and where the impact is on this commodity whole portfolio, but on oil as well, on the emerging economies? Why are they not screaming more?
Well, personally, I'm actually quite surprised that they're not screaming more. Obviously, we've seen fairly robust resistance from India, not in the recent days, but certainly over the last couple of months. I think it's a general problem for them all. They've got two things to deal with. They've got energy price inflation and food price inflation. The food price, the UN FAO food price index is up 38.9%. The RBA commodity price index and SDRs is up 38.9%. There's only so long that could be tolerated, particularly as, in a K-shaped recovery, that hits the people who are not going to actually benefit that much from the recovery even harder. So I think the protests coming out of the emerging markets are going to be that much harder. And it is very noticeable when you look at market rate expectations, above all for South America, to a certain extent for Asia, Central and Eastern Europe. We are looking at some very aggressive rate hikes coming forward, long before any of the other ones come through, and that hits hard. So I think this is going to be a much more of an issue as we go through. In principle, where the FAO food price index is basically where we had the Arab Spring before. So, and that is
when you look at those sorts of numbers, and you think how that should be feeding into decision making, and yet doesn't really appear to have got to the top of the in tray. Let's go to the survey question. Give everybody in the room a chance to cast an opinion on this, and then we're going to get our panelists to give us their outlook for the second half of the year, not just today, but the second half of the year. Get a sense of what the first day of this 6 months may look like. So the survey question, please, Irene, and we'll get everybody a chance to vote on that. The OPEC should increase by rather than will. We're giving our should opinion rather than what we think they will do. The 500,000 just in August, 1 million over August and September, or 2 million over the 3 months, which is what they did last time. Or do nothing, i.e. roll over what's already in place. What should OPEC increase by, or do nothing, option 4, given everything that's under consideration? Month by month, go for 2 months, go for 3 months, don't do anything. Carol, the second half of 2021 is always been forecast to be the sort of recovery juggernaut. The IEA has the global demand recovery for 21 at close to 6 million barrels a day, 5.6. I can't remember the last number they pressed, but ultimately a big number. We haven't seen much of that yet. It's all meant to come in the second half of the year. How do you see the next 6 months?
I see the next 6 months as 2 quarters, one which covers the summer season, which is usually what everybody was expecting, a pent-up demand for oil, for traveling, for holidays, tourism picking up. But the more you look at the numbers, the more you realize, like, oops, it's not maybe going in that direction. So one would think that, okay, then perhaps in the fourth quarter of the year, things might look better. So whoever is not going to travel in the summer is going to delay its travel plan and maybe travel in the autumn. But even then, if you look, for example, at news coming out of the UK from their chief scientists, for example, they are saying, try to open up this summer, although the UK will open up hopefully on the Freedom Day. I don't know whether it's 19th of July or 20th of July, but I was looking at where the British can go. Not really many places will welcome them without quarantine, without every proof of vaccination, etc.
They can still go to the Falklands. I highly recommend it.
Yeah, that could be on my destination. But, you know, there are warning of a tough winter. So they are maybe supporting a relaxation of the rules in the summer, but they are already warning of a tough winter, primarily because of the combination of COVID plus flu, arguing that our immunity for flu has gone down because we're not really mingling with other people who've been in hiding for more than a year now. So that's why, you know, I have mixed feelings about the next 2 quarters, and I will treat them as 2 quarters rather than second half of the year, because, you know, you take it bit by bit as you go along with and this is what this virus has taught us.
Amina, your thoughts of how OPEC will navigate the next 6 months, including a first in-person meeting in Baghdad in September?
Yeah,
Not a first one, but a first one for a while.
First one for a while that got confirmed. It's supposed to be the 30th of September in Baghdad, so that should be interesting. Yeah, just looking at the numbers again, I think they're going to take a cautious approach. If there is a need to increase in the coming months, I imagine it to be a smaller amount, more gradual. I expect them to continue these monthly meetings and do these incremental changes. I also expect them to send out a signal, as we've said before, about extending the DOC beyond April 2022. So I think this is the approach they will take.
Much more incremental rather than like we had 3 months recent in the last deal.
Yes, yeah, more month by month.
Even over the holiday season, which it'll
even over the holiday season. So OPEC doesn't believe in holidays.
Well, now that you have the virtual of everything, let's have the survey result and give Mark the last word this morning. So 1 million over August, September seemed to get most of the attention in this room. Mark, how do you see the second half of the year? Are we going to get that sort of demand recovery that has been forecast? And how much of it do you think is built into the price already, or still to bleed into the price when it arrives?
I think you're definitely right about mentioning the fact that I think there's a lot built into the price in any case. I think our biggest problem is everyone's underestimating just how much psychological scarring there is amongst the broader populace. I keep on being confronted by people who say they are empty. They feel completely depleted by the virus this year, and it's been above all this year. So I don't think the demand recovery is going to be quite as much. We're going to see pops. I think the crucial aspect to how the second half develops is, are we actually going to shift to, we're going to just live with this and get on with our lives? Or are we basically going to show that there are a lot of psychological scars? And secondly, in terms of business, it's the supply chain disruptions, which I think are actually going to get a whole load worse, simply because transport and logistics are not going to add capacity, because they know, it's a bit like OPEC. They basically know that at some stage next year, it's not going to last. So you see all those supply chain pressures and you sort of go, well, how does this actually end up with the demand picture? Because we're already seeing it in the US auto sector. We've got US auto sales today. They're expected to fall by about, in seasonally adjusted annual terms, by about 500,000. So can we actually meet not only oil demand, but can we actually meet demand in pretty much anything else that we can think of?
Well, there you have your supply disruptions, and you have also within the granular of that, let's say seafarer mariners who come predominantly from emerging economies in Asia, who don't have vaccinations, who can't travel. There's sort of that supply bottleneck on multiple levels. A second half of the year, certainly one to hope the best for. I think we may see a continuation of divergence between the financial markets and Main Street, as they say, in the sense that the markets can thunder ahead no matter how much virus or vaccination perhaps in emerging markets. But no matter where you get pops and virus, it looks like the markets are still moving upward with a wall or a wave or a tsunami of capital that's looking for a home, including the Fed pumping it up for a distance to go. So if we get a short result from OPEC today under the million mark, 500 or whatever, I think we're heading to $80 a barrel. I think the financial markets are very keen on this asset and will raise it up if the physicals do not. But anyway, that's a few pennies worth. Amina, thank you as always. Great to have you. Mark, thanks so much. And Dr. Karen Ackley in Germany, thank you for your time and participation today. On Sunday, we'll have Mike Muller and Christoph Ruhl, two of the biggest brains in the business, to reflect on all of this decisions that come out today. So good timing for that. Please join us and have a great weekend. All the best.
Thank you. Bye.